Hello traders. So what a rally we have seen in the last 3 weeks. A pullback which started with skepticism, with doubts, has actually ended in a very beautiful trend. 3 weeks of rally, back-to-back green candles, and now it seems that the Nifty is a bit overstretched. In terms of trend and momentum, I would say the daily time frame chart is looking very good. The trend is up. The momentum is also nice. In the weekly time frame chart over here, the trend has improved. The last 2 weeks candle are great. Momentum is okay. It's not that great, but probably next week, if Nifty continues to manage to move up or maybe even consolidate, probably there is a decent chance that the momentum in RSI will also improve. Now, looking at the daily time frame chart over here, it is a little bit overstretched. We can clearly understand by the distance between the moving averages and the price that it is slightly overstretched. Probably what we need is a small pullback and then probably rally back on the upside. Now, generally, when we talk about pullbacks, we talk about percentages in the Fibonacci, which is close to 61.8% or 50% or thereabout. But probably if that happens, the pullback will be very, very deep. Generally, the rallies which are very strong in nature, which are with high momentum, they retrace pretty less. So I think the first support for Nifty spot is somewhere around 25,205 or 25,200. In case if the correction is slightly deeper than expected, then we may inch towards 25,150, and extremely deep, if the correction is extremely deep, then 25,050 thereabouts. From there, if the trend is strong, it should reverse on the upside. Okay. Bank Nifty. Bank Nifty, I would say first I'll talk about the daily time frame chart. Over here, we can see the pullback happened pretty nicely. This was a zone where there was a lot of resistance, and it is really surprising how nicely Bank Nifty has been able to surpass it and even post a positive candle. Now, in terms of Dow theory, if you look over here, this is the first high, this is the second high. So we still have a lower high and a lower low formation in the daily time frame charts. So we are, in terms of displacement of moving averages, yes, the trend is up. The momentum is also fine, but in terms of Dow theory, the charts are not that great. So a small pullback may occur in Bank Nifty, probably on the downside, but it might cause a little bit of volatility. Traders have to be a little bit more careful. And in case if we need the rally in the Bank Nifty to continue, we need to surpass this high. If we surpass this high, then the momentum, then the trend in the Bank Nifty will continue on the upside. Right? The level is close to 56,150. And if you look in the weekly time frame charts, the trend is trying to improve. I would say yes, but still the momentum is not that great. So I think the daily time frame chart is far better than the weekly time frame chart, and probably with time we will understand that how things work. And you would say that why are you saying that the weekly time frame chart is bad? I'm only saying it's not that great because the momentum and the trend both are not in sync. In the daily time frame chart, RSI is much better when you compare it with the moving averages. Only for that reason, nothing else. All right. Okay, private banking space. Private banking space, it started the bounce back at the back of this 50% retracement in the weekly time frame chart. So far, in the last 3 weeks, the rally has been pretty good enough. We can also see over here in the daily time frame chart that the trend has improved. Over here, the displacement of the dual moving averages has improved. You can see the smaller moving averages higher than the longer moving average. The momentum in the RSI has also improved, and now we are at a zone of resistance. This is the previous high, and we are almost at the same zone. Now, you know that in Bank Nifty, the weightage of private banking space is much higher than the PSU banks. So here you can see a little bit of volatility in the next week. It might also happen that we may see a small leg on the downside first, and then we might see a break on the upside. It is possible. It is much possible. So as a trader, you will have to be mindful. You will have to be watchful in case if there is small downside in Bank Nifty. And if you're a derivatives trader, if you go short in futures or anything, be slightly watchful and then take your trading decision. All right. PSU banks. PSU banks, like I have been maintaining my stance in the PSU banks that they have been outperformers only for the reason that when the private banking space collapsed, when other sectors collapsed, this particular low was never broken. And exactly from this particular low, the new rally has started. Yes, it is slightly overstretched in the daily time frame chart. So little bit of consolidation or a pullback and stuff like that is probable, possible, and it is even healthy for a market which is, rallied from almost 6735 to 7400 levels. A small pullback or a small profit booking is something which is required, but overall I think the trend and the momentum should be positive in the next few weeks also in the PSU banking space. Energy pack. Energy pack in the weekly time frame chart, it is very confusing, I would say. It's extremely confusing, and the reason for that is this is the previous low, this is the next low, all right. This is the current market price and this is the previous high. So my friends, if I talk about Dow theory, and as per Dow theory, in an uptrend, we always have a higher high, HH, which is there. But do we have a, sorry, this is an HL, I'm so sorry, this is an HL, a higher low. But do we have a higher high? The answer is no. So I think we are still somewhere stuck in between. Even the moving averages are very, very close to each other. You can see when the trend is very, very strong, there is a decent space between the moving averages. When the trend is up in the daily time frame chart, there is a decent space in the moving averages here. But over here, they are very, very skewed. So I think it's a lot choppy, but the daily time frame chart is certainly improving. The trend is improving. The momentum is also improving and a little bit stretched on the upside also. So a small pullback on the downside if it happens. And after the pullback, if we surpass this high, then I think things will be better in the energy pack as well. But I think it will be way too early to call it as a revival of the sector. I think at least I have my doubts, so I will, and it's always better to be late rather than to jump in early with doubts and take few wrong trading decisions. Auto pack continues its uptrend pretty strong. Weekly RSI well above 70, overstretched even in the daily time frame charts, and now we also have a negative divergence in the RSI. You can see over here. Price is making higher high, RSI is making lower high. And yes, by the way, my friends, I'm going to post a video on RSI divergence very soon, probably next week. I've already posted one video on RSI, basics of RSI, just 2 to 3 days back. I hope you learned and enjoyed that video. I'll be posting the new video very soon. So we do have a negative divergence over here, and it seems that this particular sector is getting tired. The momentum is lacking. And as a trader, I would surely like to, trail my stop losses as fast as possible, as aggressive as possible. All right. But yes, the trend stays up. Any pullback in the weekly time frame charts, there's a decent possibility it will be bought into. But as a short-term trader, you need to continue your trailing stops. Consumer durables. Well, consumer durables is a sector which is slowly and steadily improving. You might not see very big moves as of now, but somewhere in this zone, the trend has started improving. The momentum has just started improving. So I think next week is going to be slightly interesting. If we manage to surpass the high of the last 2 weeks and even this particular high, which is just below 41,000, then things will start improving in the consumer durables. I think the heavyweights in this sector are a little bit lagging. They tried to outperform 2-3 days back, but they have, they are correcting on the downside. And we are also near important supports. If you check over here in the daily time frame charts, we are trading near important supports. So if these supports kick in and the heavyweight stocks in this sector start to perform, then we can fancy our chances for a small short-term move on the upside. But do remember, we have to surpass the highs of the last 2 weeks and this week, the level which is just below 41,000 as well. Okay. So consumption pack continues its uptrend. The trend is good. The momentum is also good. The daily time frame chart looks fine. Now, if I convert this particular candlestick chart into a line chart, again, we can see a sign that the momentum is waning. So yes, overall positivity continues in the chart, in the daily time frame chart, but a short-term consolidation cannot be, cannot be doubted and should not be doubted. And the main reason for that is, if you see this particular week, we had a wick over here, and this week has not been surpassed. The next week, immediately we have a candle which is a small inverted hammer, which clearly shows back to back 2 weeks, some sort of minute selling pressure evident on the upside, and same thing is evident here. So I think some sort of consolidation might be visible in the next week, but overall the direction, trend, momentum will remain positive in the weekly time frame chart. In the daily, we can see some more jitters for sure. Finance pack, I should say that the price has bounced back from this particular support pretty sharply. And by the time we close this week, we can see some wick in this particular candle over here, which is not that great. In the daily time frame charts, things are much better. We have a smooth uptrend over here. The displace of moving averages is positive. RSI is also showing fantastic momentum. So I think if there is a small dip on the downside, and then if we try to pull back on the upside, then we'll have to surpass this high and even 26,800, this particular high. Only then we will be able to see the continuation of finance pack on the upside, or else it could be difficult, because do not forget, despite we have two candles which have improved, the third candle has come with a wick over here. Also, as per Dow theory, we are still in a lower low, lower high formation in the daily time frame chart. So we need to break this. Okay. FMCG pack, I think it's trying its bit, trying way too hard to break the shackles to go up, but the heavyweight stock in the FMCG pack is not allowing to do it. I don't know why it's happening, but I think my view is very, very clear that once the FMCG pack closes above 57,017, 57,183, things might improve in this particular sector. But we will need a big green candle to close above it. A small candle closing above that particular level will not make much sense. IT pack. Now things get a bit interesting over here. First, I will talk about the weekly time frame chart. The weekly time frame chart, I would say that back to back 2 weeks of sudden pullback. The first candle is a very big candle. The second one is not that big. RSI seems to be improving, I should say. It's not that great, but it's improving. But overall, if I want to talk about the weekly time frame chart, it is still negative, but it's trying to improve, and it is bouncing back from the 61.80% Fibonacci retracement. Now, if we have a look at the daily time frame chart in terms of Dow theory, things are slightly improving. You can see the overall state of trend is improving. So as a trader, if I want this particular chart to continue to go higher, we will need to trade above Thursday's high for sure. And probably if this momentum continues, then we'll try to test this particular gap, which is close to 38,000 in the IT pack. Metals. Metals, I think they are continuing to outperform. You can see back-to-back 3 weeks consistently. The momentum is good in the weekly time frame chart. The trend is good. Only one thing, if you can see properly, the first candle is pretty big in size. The second is also pretty nice, but the size has diminished. And the third one is the smallest. So it shows that initially the momentum was very high, and slowly and steadily the momentum is getting lesser and lesser. The trend remains up, but the momentum is weakening. So some sort of consolidation in the daily time frame chart cannot be ruled out. Overall biasness might remain on the upside. Chasing this sector will not make sense because already it is flying on the upside. Any sort of pullback will be better for a short-term trader. Infra pack trying to improve overall strength in this sector. First candle, not that great. Second candle, better. Third candle, even better. So this is pretty strange. Yes, I can understand. This is very strange. But if you can see over here, we have also been able to break the previous high, which is a good thing. Slightly overstretched in the daily time frame chart. So some short-term consolidation or a dip cannot be cannot be denied. But after the pullback, you should see that the trend resumes on the upside, and if this high is surpassed, then the price will try to test these levels. But always remember that the correction should not be very, very deep. As I always say, that the strongest rallies generally retrace much lesser. Pharma pack doing its bit to improve, as I have been maintaining my stance on the pharma, that the daily time frame chart, it was looking like this. It was looking pretty choppy, but the weekly time frame chart was much better. And this week you can see one more candle. So there are chances that pharma will continue to do better in the next 1 or 2 weeks. And the heavyweight stocks in these sector should participate, and then you will be able to see that the prices move on the upside. All right. PSE sector. PSE sector, I think again over here, the weekly charts is all right. In this sector, I would also like to see the monthly time frame chart. The monthly time frame chart is pretty much sideways. So I think as a trader, I would like to stick to short-term swing trades. And the weekly time frame is trying to improve. It's not that great. Yes, in terms of price, you can say that we had 3 beautiful weeks, 3 beautiful candles on the upside, which is fine. But when we compare the movement with the RSI and the moving average, it's okay. It's not that great, but the daily time frame chart is much better. Slightly overstretched, distance between price and moving average higher, can consolidate a bit. And as of now, there is no other signs that they look for a reversal or something. Only thing we should be mindful of is these levels. Over here in this zone at 99.68, 99.70, there is a sort of cluster which can act as a stiff resistance for short-term traders, and we are a little bit away from it, but as a trader we need to keep our eyes open. All right. Realty pack. Realty pack, again, a sector which is trying to bounce back from the 61.80% retracement. Overall, the weekly time frame chart is still negative. Despite this one big candle, I would not say it's very, very good. It's okay. We have bounced back. It's a good thing. But the daily time frame chart is still range bound. We are within a range for sure. We need to surpass this high first, then this high, number 1, number 2, and then as soon as we pass this one, we will also hit this resistance. So I think I should say that in the real estate pack, prices will have to do a lot to resume its uptrend pretty strongly, and it's not going to be very, very easy. So whenever you take trades in the real estate pack, please be careful about these levels. This is the first level, second level, and the third level. So in a very short span of time, there is a lot of resistance coming here in the real estate pack. Okay. India defense, one of the sectors which is very, very strong in along with, I should say, Nifty auto, Nifty metal over here, Nifty metal, Nifty auto, and even the PSU banking space. India defense sector is also very, very strong. Back-to-back candles with very, very smaller wicks in the weekly time frame chart. Monthly time frame chart, I know that we don't have enough data, but overall price looks much better. And even in the daily time frame chart, things are pretty nice. A little bit overstretched in the daily time frame chart, but things are okay. Chances are that a small consolidation is possible because the distance between the price and the moving averages is slightly higher, but overall the biasness still continues to be on the upside. Okay. Midcaps. Midcaps, a very strong chart, but if you check properly, the last few candles over here have been very, very small in nature. So I think some sideways move, consolidation move will not be denied. We should keep our eyes open. Biasness will remain on the upside, but you will have to embrace for some sort of short-term choppiness. But overall, within a choppy day, you will see bursts of bullishness on the upside also, because overall the weekly time frame chart is improving, the RSI is improving over here, the RSI in the daily time frame chart is also improving, and in all these candles I cannot see a lot of negative candles. Yes, the size of these candles are very small, I can agree with that, but not a lot of negative candles are visible in this particular sector as of now. Okay. So overall, I should say fantastic 3 weeks we had. Overall, things are improving, which is good for the Indian stock market. But I think as a trader, we'll need to be a little bit watchful, especially with the IT pack and the private banking sector. The reason for that, I think these two sectors, if I'm not wrong, enjoy the highest weightage. Even the energy pack, I think I have my doubts on. So these 2 to 3 sectors will try to, act as a spoil sport. But other than that, things are improving. And as a trader, I think you should know which sectors are improving and the stocks within that which are improving. Not a time to be extremely aggressive, but surely you will see much better days ahead. All right. Trade less, trade wisely. Thank you.